Guys, our new weekly candle is already looking not all too good, although it just opened a couple of hours ago. We will now take a look at the charts immediately because also on the smaller time frames, we saw a breakout that we were expecting in yesterday's video, and I actually just opened a new trade. Besides that, guys, we will take a look at some very interesting on-chain data and also at some indicators and also the heat map to find out what we need to expect next from the Bitcoin price here in the upcoming days, weeks and months. Besides that, guys, as always, I would really appreciate it if you could smash up a like here on today's video. Every single video of mine, I try to reach the 1000 like level, so I would be amazed if we could reach the 1000 likes on today's video. And besides that, don't forget to subscribe, activate the bell, leave a comment down below. This supports me the most and also shows the YouTube algorithm that this video is relevant right now. And guys, I can already tell you it is, because what we are seeing here, we discussed it in my last video, is the breakdown out of this rising wedge. We discussed in our yesterday's video that pretty much we are seeing the 4-hourly RSI going into a top range. We are seeing the daily RSI going into a top range. We discussed that there is some more upside potentially possible to the $27,000 level in the case that we are not seeing now any bearish breakdowns and continuations. And so far we for sure saw a bearish breakdown. We have so far closed a 4-hourly candle below the old below the old low point after our initial breakdown, right? We saw here somewhat of a retest, a fake into the pattern again, but this was only with a few hours, so I really can count this as a successful retest. That's why, guys, I just took some profits off my swing long position, only a little bit. As you guys know, since $29,000 we have a swing long position open. We scaled it up all the way to the $23,000 level while we were going down to the $18,000 level. Now the average entry price is at the $23,000 level, and I just took some profits out of that trade and threw them into a short position right here. Like I said, it is a relatively small short position. Nevertheless, guys, I just want to be prepared if we are seeing here now a breakdown to the downside and the squeezing of the Bollinger Bands that's pretty much unseen since 2020. I mean, we have not seen the Bollinger Bands squeezing so hard. The last time was actually right here in October 2020. So right before our massive run-up came for Bitcoin. So this is actually a beautiful sign, right? Bollinger Bands are squeezing. A massively volatile move is about to occur for us. The only little bit dangerous thing is that in the situation we are in right now, with the weekly candle, for example, also looking like it's so far getting rejected from our massive falling wedge here on the weekly time frame. It looks right now like this could be the weekly confirmation of the breakdown, actually, guys. And this would be, this would be very bearish, right? This would be super bearish. So in the case that we are getting rejected here now, we are seeing, and we are going to take a look at the on-chain data in a second, if this is even a possibility. If we are now seeing the next weekly candles starting to dump, we need to then pretty much bounce off the $19,300 level, so we at least have the chance to form like a massive weekly W as a bottom out pattern, for example, for this bear market. Because if we break then this old low point of $19,300 to the downside with the weekly, in that case, like I said, quick wick to the $16,000 to $14,000 level is almost, it's almost not possible that it doesn't happen in this case, right? When we break the 19,300. We are still far away, right? The 19,300 is still far away. Let's just hope we never reach that price. Nevertheless, we need to be very careful now because the daily time frame is still getting rejected. And as long as this daily candle is not closing above the $24,000 level, it is definitely a very bearish daily candle. So let's take a look for that, guys. This is what I'm holding an eye out. If we are closing this daily candle above the $24,000 level, this might have some immediate changes tomorrow on my short trade. Maybe I will actually then close it out again with a small loss. I will explain to you tomorrow why I would potentially do that if this daily candle closes above the $24,000 level. But guys, now the day is still very long. We just saw a bearish breakdown. We have a bearish breakdown target on the smaller time frames on the 4-hourly right now for this rising wedge of the $23,000 level, around that level, 23,200, 23,000. This is the price level where we have a bearish price target right now. And if we go into the direction of that price, I would also put my stop loss for the current small short position in a profit, just to be sure that we won't lose any of our profits in the case that this is not really any bigger bear run reversal, but this is only maybe a small dump to the downside before we continue to pump, right? Because on the big time frames, everything still can change since the weekly candle is still open for 6 days, so a lot of time. The Puell multiple is an indicator that people have used in the past relatively often to define market tops for Bitcoin. The only thing is that pretty much right now we are in the range, right, where the bottom normally is in for Bitcoin. We only need to keep in mind, also looking here at the history for Bitcoin, that this Puell multiple can easily go sideways for quite some time, and the Bitcoin price will go sideways or even slightly down during that time. And it's also possible that this Puell multiply does a double bottom, for example, how we saw it in 2011. Actually, in the bottom 2011, we saw a beautiful W pattern. Maybe this is something that is realistic here again, as I just showed you on the weekly, but nevertheless, guys, this also shows us the bottom is almost in, guys. You don't need to be scared of your HODL portfolio or anything like that. In my opinion, at least, I don't care about my HODL portfolio anyways. That's why we have a separate trading portfolio, right? To try to make the HODL portfolio bigger. But looking at, like I said, this for now, this definitely is a sign that the bottom is in or is in within the next 2 or 3 weeks. So guys, be prepared. It won't be boring for all too much longer, in my opinion, for Bitcoin, at least now for the immediate short term. If we are done maybe in 2 or 3 weeks having a very boring sideways movement again, that's a possibility. But I think the next 2 to 3 weeks could get very, very interesting since the Bollinger Bands are squeezing so much. We are seeing a decision now made on the weekly time frame and so on and so on. What we are seeing here is the number of addresses with over 10,000 Bitcoin. And what we can see here is that over the time, while Bitcoin was growing, this constantly increased, pretty much to the point of the 2017 bull run. Because at that point, Bitcoin probably got so expensive that it was unrealistic that the number of people with at least 10,000 Bitcoin will grow. What we saw is that when Bitcoin started to head into its bear market, guys, we saw the top. Can you see this rounding bottom here? This rounding bottom, more or less. We saw the bull run. We saw a correction in price. And at that time, we saw a final spike all the way up to a new all-time high of addresses with 10,000 Bitcoin or more. Why is that? Because Bitcoin was affordable again. And it was realistic that people, single entities, have that amount of US dollar value on a single wallet with 10,000 Bitcoin or more. Now, over the period of our last bull run, we can see that this heavily declined. It makes massive sense. People are taking profits, but especially after having such a big run up, I mean, people will see, okay, 10,000, some people will not even sell their Bitcoin. Maybe they just redistribute them because they see, okay, 10,000 Bitcoin is really too much to have on one wallet nowadays. I need to split it to different wallets. That's why we can see a collapse here. We can see a collapse here because the whales, the big players, the manipulators are exiting the market, right? During this accumulation here where all the retailers are FOMOing in, buying up all the profits that all the big players and whales are cashing out. And what is happening now is that we are recovering quite a lot. We are recovering quite heavily here on the number of addresses with 10,000 BTC. The only thing is that we saw pretty much a final massive drop for the price of Bitcoin for the bear market right after the 10,000 BTC holding addresses reached a peak again. And since this is going up so aggressively here right now, as it also did in this curve here, in this curve formation during the bear market of 2018, right? We are now here, we reached the top, we are forming a rounding bottom for the 10,000 BTC holders. We see the top, we are forming right before we see the top, right here. Here's the start, right here, we are forming this curve. Right before the top, we are forming a curve that peaks right before we see the final correction to the downside, guys. So this is actually an on-chain data that is predicting a final dangerous rig for Bitcoin, potentially, because Bitcoin is getting bought up. A number of addresses of 10,000 BTC is rising, but it's not at its old high point again. And the last time in our last bear market, we overshot the old high point, since it was a lot cheaper to have 10,000 BTC again. So this is realistic here to happen again as well. And since we are moving so quickly, only a little bit more upside could mean a dramatic downside for Bitcoin. So let's be aware of this. Let's just take a moment back. Let's say this is a good sign. Bottom is in. Whales are growing. The only thing is that when this happened the last time, we actually saw a final big correction to the downside. So I want to be prepared for that for sure. Nevertheless, guys, let's just wait on how our daily candle closes. Let's just see how our upcoming 4 hourly candles perform. Like I said, guys, I took some profits. I opened a small short. Nevertheless, it's a risky one, because if you really want to play it safe, you should for sure wait for the $27,000 level, because this is for sure a level where I will, depending on how this also plays out now here and what development we see in the charts till that point, but right now I would still open a short there. Let's see what happens within the next couple of days and weeks and what price development we see, and if we need to make any changes on that strategy. Maybe it's even time in a couple of days to decide that at the $27,000 level, we will never open a short, but we will scale up our long because something changed in the charts and it got highly likely that it will break. Guys, let's just wait and see. I will keep you updated on my trades and everything I do. And then we're going to see us in the next video. Subscribe, activate the bell, leave a thumbs up. Till then, bye.